let's get a picture of this. Everyone's got to pay taxes. You can't get around it. It's part of the way our government keeps things going. Uh, Roadways, military, research, space exploration. It's just things that need to be done. The difference being, I don't know anybody out there that doesn't want to reduce their liability. And that's what we're going to discuss today is different ways of getting your liability done. The simplest way I've learned from that is simply to be a small business owner. A lot of the information that we're going to go over today, I got from the IRS website direct. There's a couple books that were also read and a couple online articles. Let's talk about how people get paid. You know, people get paid in a couple different ways. One of the biggest ways is just a general W-2 employee where you go in, you make an hourly wage, they take tax out of your check and you go on. Then you've got the contract employee or the self-employed, the small business owner, and that's what we're going to discuss today because they seem to have a lot more tax liability, a lot more tax write-offs that you could do, and that's what we're going to go over right now. You know, one of the biggest ways that you can write off is your startup costs in a startup business, and that can be amortized over a 5-year time span to kind of help offset that cost until you get your business really up and going. You know, you've got professional legal services. You have to have attorneys on hand. You have to have consulting services coming on. Gifts and advertising. Anything that you're going to advertise, you get to write off. Also, if you want to give a $25 gift to each person, you've got that as an option as a write-off. Your state taxes, Social Security taxes get to be written off as well. You've also got any telephone and internet services. That's also going to include if you're in your own home and you have a home office, you get to write off all the stuff that's tied to that. Be it house cleaning, electric, bill, internet, your cell phone service. All of that can be bundled into one, which can be at the end of the year can write up to be a huge amount. Any education training that you have to do, that's going to be a big one. Everybody has to keep growing throughout their business. Any liability insurance, health insurances get to be written off. Anybody with W-2 employees don't get that option, but as an individual and an independent employer or a small business owner, you get to write all that stuff off, and that includes for your employees as well. Any bad debt with that, of course, gets to be written off. One of my personal favorites I like to go into a little bit of detail on is the automotive. This one ends up being a very, very large one. And there's two different ways that you can do. The first one is you can keep track of everything individually, be it keeping track of oil changes, tires, every little dime that you put into it. But what most people like to do is just write off a per mile charge. And that's to include everything that gets wrapped up into it. And here in a few minutes, we'll go over a great example of how that gets your reduction down so you don't have to pay as much taxes at the end of the year. I got the privilege of sitting down and talking with a fresh startup business, Cornetics, with Brett Chambers. We went through quite a few little discussions. One of the biggest things I asked him was, did you start your business based on tax deductions? He said, no. He goes, but it's the only way I can keep myself afloat. He's been around since April of 2012, and he keeps growing and growing, and a lot of it he contributes because of the tax write-offs in the businesses. Some of his favorite ones that he liked to write off, again, was travel. The auto expense saved him a lot of money. The retirement, $17,000 plus 25% of the income. And if you look down here, you'll see these are just some basic sales. These are just a kind of a real world example. You've got sales, you've got auto deductions, you've got $25,000 travel expense, you've got your office expenses, then you end up paying taxes on just a very small amount. Again, everybody wants to reduce taxes. And one of the easiest ways is just to simply be a self-employed business owner. The benefit, but keep in mind you still need to pay your taxes. We still have roadways, bridges, military. We still have things that we have to contribute to help our government keep up and going. The easiest ways to keep tracks of doing this is great records. These are some simple steps you want to pay attention to. Save receipts, keep good records, plan wisely. Use all the deductions you can, and of course, get a CPA to walk you through every single step of the way.